So what exactly is SIP, I may ask? What exactly is the 50-30-20 rule?
This is a very powerful and simple rule. Imagine your income as a pizza divided into three parts. 50% of it goes to your needs, 30% of it goes to your wants, and the remaining 20% goes to your future investments.
For the audience, can you explain what compounding means?
Have you heard of the snowball effect, where a snowball gains traction over time as it rolls down? And compounding is basically the same theory, where your money starts making money on itself.
So what should someone do if they haven't started yet?
Start now.
Let's say if a person has fallen for the scam, what could be the next step?
Log into this website. I think it's cybercrime.gov.in. And for those who cannot log on to that site, there's this helpline that they provide. It's 193.
What makes a strong portfolio in such case?
So if you keep these three things in mind,
Have you ever reached the end of the month and wondered, where did all my salary go? You're earning, you're working hard, but somehow savings never seem to grow. Today we are talking about a very simple budgeting rule that can change that. The 50-30-20 rule. And to break it down, we have financial expert from Oceano Apex, Dhruvan. Welcome to the podcast method, Dhruvan.
Hi. Yeah, glad to be here. It's a pleasure to be here, and I just can't wait to educate the audience on
Perfect. So starting very simple, Dhruvan, what exactly is the 50-30-20 rule?
This is a very powerful and simple rule. Imagine your income as a pizza divided into three parts. 50% of it goes to your needs, 30% of it goes to your wants, and the remaining 20% goes to your future investments. Let's just say, what are your wants? Wants are your actual requirements that you have, like paying your bills on time, your rent, your EMIs, things that you cannot live without. So you need to save up to 50% of your income for that. And then moving on, you have 30% that goes to your needs. These are the needs that you have to maintain your lifestyle. So let's say you have your certain subscriptions that you pay for, dining out, shopping, or extra expenses that you need to maintain your lifestyle. And the remainder 20% that goes into your savings or your investments, where let's say you put that money into an SIP or invest into a fund of your choice. I'll just make it easy by giving you an example. Imagine Mr. Rahul. He earns 50,000 rupees per month. So half of that would be 25,000. That goes to his bills, EMIs, and whatever it is. And the remaining 30% that comes to roughly around 15,000 that goes towards his lifestyle choices, whatever he needs to sustain that. And the remaining 10,000 that goes towards SIPs or investments that you got going on in the market. And that's the basic rule that everyone needs to maintain. And it's not about the amount that you earn, it's about the consistency that you keep with your investment.
That's actually very powerful, Dhruvan. So what you're saying is it's not about 50,000 or 5 crores.
It's not about it. Doesn't matter if it's 50,000 or 5 crore or even 500 rupee. You just need to stick with this rule where half of it goes to maintaining your bills and needs, 30% goes to your wants, and the remaining 20% you choose to invest in the market.
Okay, perfect. Any final tip for someone who's planning to save or...
Doesn't matter what amount you start with, as long as you start with that discipline and you keep that consistency going, very soon you'll have a big amount for your future need.
Perfect. So you're saying it's all about consistency.
It's all about
financial discipline.
Yeah, exactly. As you said, about maintaining your discipline and keep that going.
So talking about discipline and financial at large, so there is a term called SIP.
yeah,
So what exactly is SIP, I may ask?
it's basically systematic investment planning, where you put in a small amount. Doesn't matter what amount you put into a mutual fund every month, and you keep that going. And pretty soon, as I said before, you'll have a big corpus amount at the end, and you just need to stick with the discipline and you need to keep that going. Because when you put in an SIP into a fund, it keeps compounding over time, and then your money will actually start making money on itself, and that's double the income that you already get.
So you mentioned compounding. For the audience, can you explain what compounding it means?
Have you heard of the snowball effect? It's where a snowball gains traction over time as it rolls down. And compounding is basically the same theory, where your money starts making money on itself. So you keep getting returns over your returns, and that's how you actually make money over time.
Audience, please make a note of it because everyone hears this term compounding, but hear what compounding actually means. Thanks, Dhruvan, for enlightening us.
Yes.
It's a very good explanation which you gave. So now I want to just take a example. Have been a situation, there has been a doubt. People say, okay, I started investing, but I didn't see much growth.
Yeah, many people fault over that. It's not their fault. It's just that there's this rule we stick with. It's the 7531 rule. When you start putting in an amount, you won't see anything for the first 7 years. You'll barely see it growing. Then in the next 5 years, you'll start to see that money getting some traction, start getting returns over. Following 3 years, you'll see a huge jump over your initial invested amount, and that's when you see your corpus actually gaining momentum. And in the last 1 year, that's where you see your actual corpus be as good as it can be based on how much you have invested. That's the rule we should stick with. And again, like we said before, it's about the consistency and the discipline that you keep. Because if you pull out between these years, you won't see much of any returns, and that will actually discourage you from investing. So let's just take an example. Again, Mr. Rahul, who earns 50K, puts his amount over a fund that gives you like 12% annual return. If he stuck with that amount for, let's say, 15 years, roughly the amount he'll be getting is 10 lakh rupees. But if he waits for 5 more years, and by year 20, he'll be gaining nearly 20 lakhs. That's double the amount gained in 5 years.
Wow.
So again, it's the consistency and the discipline that you keep, and that's how you make money in the market.
So that's the discipline which everyone should follow, because it's all about compounding and being consistent over the time.
Absolutely.
So what should someone do if they haven't started yet?
Start now, because see, the more you delay it, that's more money you're losing. So there's no better time than now. So just go for it. And it doesn't matter what amount you're investing, because there are many funds that offer you SIPs for 200 rupees or 500 rupees. And you just start with that. And as you keep growing, you can increase that invested amount and just keep that discipline going.
So you're saying start small, start early.
Exactly.
Start 200 rupees or 500 rupees.
Doesn't matter how much you start with, but it matters is when you start, and you just start right now. That's all I'm going to say for the audience.
So start right now, guys. It's high time now. Yeah. You talk about SAP, you talk about financial discipline. So there have been a certain, I would say, where it comes to parenting, or parents, I would say, they do talk about the education fund or child education security and safety. So what's your take on that?
It's a very valid concern amongst parents, because see, a course that costs, say, 10 lakh per year may cost 30 to 40 lakhs in the future. And if we're being honest, no parent wants to unload a financial burden like that over the children. What I would like to say to those parents is there's no better time than when your child is conceived. You should start investing, regardless of what happens. Because see, I'll give you an example. Let's take 2 sets of parents. One set of parents starts investing as soon as the child is born, and the other set waits until the child is 10 years old, and that's when they start investing. So let's say the first set of parents, they invest a certain amount for 18 years or until the child is self-sufficient. So in order to catch up to them, the second parent has to invest double the amount in less time to catch up. And see, that's where certain things fall off. So there's no better time.
Yeah. So that's the common mistake a parent should avoid doing.
Yeah, a parent shouldn't wait until their child is old enough to make decisions or whatnot. You should start when your child is born. That's the best thing you can do right now. And see, I have a few examples of my own. I know people who started investing when their baby was born, and when their child reached a certain age, they have nothing to worry about regarding their education or the kid's financial future. That's the best thing that could happen.
So that's clearly it shows, like, why should you start early when it comes to planning the education funds for your young ones. So can you explain this with like you explained the comparison, and also there have been a Yojana from government side, we call it Sukanya Samriddhi Yojana.
Yeah.
So what's your view on that? Like, can you explain?
See, honestly, it's one of the best programs or yojanas offered by government, namely for three basic reasons. So, number one, you get government-backed safety, and see, in times like this, if you have government safety, that's one of the best things that could happen. Number two would be attractive in interest rates. See, that's where the money saving or the money making feature comes, and most parents, they would like that. And number third would be tax benefits. Of course, it's a government program, you get an insane amount of tax benefits. And that often relieves prospective parents of certain financial burdens when it comes to education. Because see, in times like this, education is not cheap. So, and I would also say that try not to make this yojana the entirety of your plan. It should only be a part of your plan, because a good example would be keep this yojana as a safety net, and that relieves parents of the stress that happens.
So you're saying relying on such safe option is not the only option parents should rely on.
Yeah, like I said, don't put all your eggs in one basket. So parents shouldn't rely on just this yojana for their child's education. They should start investing, let's say start investing in SIPs or put your money in certain funds and watch it grow alongside this yojana, so that your child's financial future is safe, and so is your stress level, because it's not easy being a parent, because you have to think about a lot of things and there are a lot of costs associated with it.
And also I read this saying that education is not a goal but it's a responsibility. So
exactly,
even planning for the education, it's a big responsibility. And yes, you said it right, parenting is not easy when it comes to managing the education and certain lifestyle of the kids today.
Exactly. And see, no parents wants to start their child's education with a financial burden like a loan. So if you invest it, it's all safe for you. That's the best thing.
That's a good point. Talking about safety here, like we also have certain drives, campaigns running on digital safety and UPIs, and there are lots of scam happening nowadays. So can you just take us through the scams happening, and like how can we, or how can the audience at large be a little aware about it?
Yeah, see, it's a digital world that we're living, and one of the best things to come out of demonetization is UPI. I'm sure you and many of your audiences would have.
We have stopped using cash.
Yeah, because it's convenient, it's reliable, and there's actually less probability of fraud occurring. But as you know, scammers find new ways to harm you, and I'll just give you a few examples of the scams that are running around. See, you might receive certain phone calls from unknown people asking you to divulge your financial details, or they ask for this OTP or PIN so that you can receive money. So to that, I would say keep in mind, no bank or no institution will ever ask for your PIN, and you don't need a PIN for receiving money.
Yeah.
You don't only need to put in that PIN when you're sending money to someone. And there are many sorts of scams, so we can't put a finger on all of those, but the most common ones are the ones that ask you to click on certain links, or they would ask you to install this app to share your screen. And
digital arrest was one of the very
exactly. Thank you for bringing that up. In recent years, we've seen digital arrests happen. You'll often receive a video call or a WhatsApp message from someone pretending to be a police officer, and they would try to implicate you in a case, and they would ask you to pay certain fines or certain amount. And see, that's where you should keep in mind, the police doesn't work like that.
Correct.
If they have a complaint against you, they'll reach you directly. They won't bother you with a video call or a phone call. See, that's how it happens. And no policeman would ever ask for a fine or something like that directly. it's usually legal notices or court orders that happen.
And that comes.
Yeah, and that's one of these scams that's happening. And another scam that came to our mind is the promise of certain lot rewards or certain, let's say, lottery tickets that are supposedly in your name, and you should just click on this link and it will be credited into your account. Don't ever do that, because see, that's the important thing. If something seems too suspicious, because it is. See, that should already.
It is scammed.
Yeah, exactly.
And that is so real and so scary. I'm sure, like, even I've seen certain cases which happens with my family and dear ones, where they have gone through this kind of digital arrest, and such scams have happened with them. So moving on, like, let's say if a person has fall for the scam, what could be the next step?
Immediately, the number one thing you should do is go to your bank or call them up, block all your cards and freeze your account until you know what's going on and they can take the appropriate steps. Second most important thing would be log into this website offered by our government for cybercrime. I think it's cybercrime.gov.in, and it's a very good place to lodge your complaints, and they resolve it immediately. So it's very good that they offer that. And for those who cannot log on to that site, there's this helpline that they provide. It's 1930, and it does the same thing like the site. If you have a complaint, you just lodge it with them and they'll resolve it. Because I'll give you an example. See, a friend of mine recently got this call. Things happened that shouldn't have happened, but he did the right thing. He did step one, in contact his bank, block his account, and the second thing he did was lodge a complaint on the official website of our cybercrime department. And within a couple of days, the culprit was located and losses were recovered. And the important thing is that if you lodge a complaint, you're potentially saving millions of other people from getting scammed, and that's of course a good thing.
Yeah, so like complaining to cybercrime is important because other people get aware of, and people, even police know how to and where to react immediately.
Yeah, you're saving millions of other people from getting scammed, and that's obviously good.
Yeah, and also, like, I always give a thought on this, like, why do people fall into it so easily? Because these scammers, I'm sure they'll be calling us or they'll be approaching us. They know what time is not a right fit time where people should, react in a certain way.
Yeah, again, it's all because of the sense of urgency that. So you should just take your time, and if you think about it, you should be very careful about what's going on. And if they ask for certain private information or personal information over the phone, just cut the call and go about your day.
That could be a red
Yeah, that's one of the biggest red alerts. Because see, again, no one asks for OTP over the phone except scam. So if that happens, just cut the call and lodge a complaint. And that's it. That's all I would say.
So stay aware, stay alert, stay safe. Coming all over to the current scenario where Iran, US are in,
it's a very
odd situation, and so markets are uncertain. We don't know. Like, I recently read petrol rates are higher, one peak, and even the diesel rates are going skyrocket. So, what a person should do in this situation when it comes to financial safety, or even how to maintain their portfolio? What is your take on that?
See, I think situations are like this are beyond our control. I mean, if you look at history, there have always been wars. There have always been crises, pandemics, recessions, inflations. And every single time these things happen, the market has taken hits, but it adapted to those and it also grew. So the main default that investors do is that they hear certain types of news, they panic and they react unnecessarily. That's when they lose their money. I mean, as long as you keep it simple, be disciplined and consistent with your portfolio, you won't lose any money. You'll actually gain money during times like this. You should just stick to 3 simple things. Number 1, diversification. You've heard the saying, right? Don't put all your eggs in one basket. That's where this applies. You should spread out your investments over various assets or various funds, and that's where you actually save some money, because in case one fund goes down, the other fund stays up, and you basically safeguard. safeguarded.
So balancing out.
Yeah, it's a balancing act. That's the best way to put it. And the second main thing that I would say would be allocation. So diversification tells you to diversify all your assets. Allocation would tell you how much to put and where. So it doesn't have to be 100% equities or 100% debt. You should allocate certain amount to debt, certain amount to equity, and if there's a remaining amount, you should put that into safe assets. And the third most important thing would be consistency. See, you just keep that discipline and you keep that consistency going. You'll gain money where you're supposed to lose money. And see, that's where you can safeguard your portfolio from times like these.
Thank you for answering that, because in such a situation, I always come with the common question where I always ask myself, where should I put my money? How should I secure my money? Because we never know what are the market scenarios. But yes, it's fluctuating. I find certain it's good, also certain it's, I would say, neutralized. As you said, being consistent is the only.
Being consistent is the main discipline that you should have.
Okay, and also, like, can you tell our audience in terms of what is the mistake people are making in such situations? Because looking at the market going up and down, getting panicky. So what are the steps or what are the things which they shouldn't even think about?
So let's take this war, for example, the US-Iran. We saw a crisis in the prices of gas and petroleum. So many investors might panic and they would unload their shares in certain gas needs or energy sector. And see, sometimes when they do that, the entire market reacts to it, and that means more losses for you. So instead of reacting to news and panicking, you should just work on your portfolio and allocate certain funds so that they are safeguarded in case the market takes a turn for the worse.
That's a very powerful way to look at it. So what makes a strong portfolio in such case?
Imagine your portfolio as a ship, and your ship is sailing in an ocean. The ocean is the market, and the waves that you encounter are certain crises or wars, events that happen. And so the way you ensure your survival is how strong your ship is. So a strong portfolio is always diversified, is carefully allocated, and it depends on your discipline as an investor. So if you keep these three things in mind, your ship can sail through any sort of ocean and no wave will ever come close to crashing your ship.
So you're saying discipline beats prediction?
Yeah, that's it. You don't need to predict what the market is going to do, but you can predict what your portfolio will do in case the market takes a turn. But it's very important, because if you're not consistent, if you react wildly to certain events or news, you'll lose money regardless of what. So if you're consistent, if you make smart decisions, you'll save money or you'll earn more money. Who doesn't like?
Yes. Who doesn't like that? Earning more.
You heard Dhruvan just said you should diversify, allocate, and you should be consistent with it. Because you may not know the next move of the world, but you should always know the next move of your portfolio.